All right, welcome to our Market of the Moment update for the week of September 26, 2022. Michael Oldham with the Oldham team here with Chris Madrid and Guaranteed Rate. What's up,
Hey,
Chris?
hey, man, what's happening?
Anyway, let's jump into it today. Maybe that summary from last week's update, and some big things happened. And then we're going to look at our mortgage-backed security charts for the quarter and for this month. So let's start off with
rates, right? What everyone wants to know. I mean, what we're seeing in the market is on a 30-year fixed, you're looking at interest rates anywhere from 6.8 to 7%, possibly over, right? This is uncharted territory for mortgage companies and for lenders, and ultimately for investors. So we'll see here in a little bit on the charts. If you're looking at shorter term financing, like a 15-year fix, that is pushing low sixes now, right? 10-year, 15 years were in the 5% range for a long time. Now they're not. So now the shorter term interest rates are pushing past 6%. So low sixes, 6.25 is probably where you're going to see like a 15-year fix if you were wanting to finance for a shorter period of time. So moving right on, go back one. Fed announced that they were increasing the federal funds rate. That was not a surprise to anyone, right? We fully expect them to go up by 75 basis points or 0.75%, and that's what they did. So that was no surprise there. That has now pushed the federal funds rate up to between 3 and 3.25. So there's not a set amount, but it's somewhere between 3 and 3.25 for the federal funds rate. Now again, y'all, that doesn't apply to us, right? That has no bearing on mortgage rates, on car loans, credit cards, student loans, nothing like that. The federal funds rate does not dictate that. That is simply what banks lend to each other overnight. The prime rate, though, does apply to us, right? It's what your typical credit cards, equity loans, anything like that are based off of. Most lenders will take the federal funds rate plus some, right? And they will then plus a margin essentially, which is what they're going to be making. Normally, it's for the prime rate, it's the Fed funds rate plus 3 for prime. So if you're wanting to know what the prime rate is today, is 6.25, because they're taking the higher number, the 3.25 plus 3. So not only do we talk about some stuff here, we also educate, right? So that's what we're trying to do. So you hear somebody talking about the prime rate, it's currently 6.25, because again, that's 3.25 plus 3. So, as we've been talking for, the last, I don't know how many months, inflation remains out of control, right? It's at this point, it's super elevated, out of control. We can all feel it when we go to the pumps, when we go to the grocery store. Man, I went to just to completely get off subject here, but I love that we have the flexibility to do this. I went to the grocery store to get some half and half, right? And your typical quarter jug, right, of not even a half gallon, like a quarter gallon, whatever it's called, like $6 for just your regular half and half. So I guess I'm gonna have to go to back to drinking coffee just without straight anything black in it, just straight black. Yeah. Anyway, so yeah, we fill it at the grocery stores. Although gas prices are slightly lower this week, we fill it everywhere, right? So if you're going out to eat, if you're going to the grocery store, man, if you're going to freaking Home Depot, right? Things are crazy. Yes. Anyway, so we're all feeling elevated inflation. Now one of the somewhat positives, I guess, of the Fed meeting last week, as well, as they indicated, at least for the next handful of months, they will not be selling off mortgage-backed securities. So that it's kind of twofold. So they're not going to be selling them off, but then they're not going to be reinvesting, which is what they have been doing for the last 15 years. They were purchasing mortgage-backed securities, reinvesting. So again, that's what has kept interest rates artificially low, which we're most likely not going to see anymore, right? As we've talked in the past, in a typical healthy market, right, a healthy economy, mortgage rates are in the 6% range. So that's what a healthy market looks like from a rate perspective. And again, right now we're seeing we're seeing rates push up into the low to mid sevens, right?
Wow.
So you can go to that next screen, and we'll look at mortgage-backed securities. And man, this week it has been a roller coaster ride with mortgage-backed securities. So this is just a quick view from this month, right? So we started the month in above 100. So we're looking at that
Go to this
far
one, huh? I
far
need
left
this one.
candlestick. Nah, it's okay. This is fine. I mean, we can work with this one. But this is your email, so but it's fine. We can talk about September. So this is the month of September. This is most recent information. Started the month over 100, right? So we see that far left little candlestick there, and we were over 100. Well, we can clearly see how this has deteriorated to this past week to Monday, which was like the 26th, 27th,
Yes.
where we lost, the friggin' bottom fell out, and we lost over 160 basis points. So if we look at that biggest candlestick right there on the right, we can see that started the day somewhere in the 97.5 range, right? And just, I mean, dropped below 97, obviously closer to about 96. So I think all in all it was 166 basis points.
Wow.
Something like that. So we've gained a little throughout the week, but we're still not. Yesterday was actually a pretty decent day. We had a couple of clients under contract with the Oldham team, got them locked in yesterday.
Yeah.
And then of course, mortgage-backed securities this morning, we're down, we're at this point, we're down 41 basis points. We were down over 30 this morning. So yesterday was a great day to lock, which we advised all of our clients to do so. And we did, thankfully. They're in good shape. But man, we're starting to see these massive, these massive swings from day to day in rates, and in particular in the bond market.
Yeah. So if you're in the market right now, you need to be with someone like Chris that's watching this hourly. So just like if you were
Minute
buying
by
a
minute, baby.
stock,
Minute by
it's
minute.
like if you were buying a stock and you wanted to get it low, you want to, get this interest rate when it ticks down at the right time. So having Chris in your corner, that's the way to do it. We need to go back and look at that other. Probably.
No, it's fine. We can skip past it. Yeah, because it's just going to show. It's just going to depress all of us to see where they were.
I'll
this
put
quarter
it up there to show how the third quarter.
Oh gosh.
We have just constantly ticked down. I remember when we were talking about this back in August.
I think you need to go to the other screen, by the way. You need to switch screens on your
back in
Zoom.
August when we were talking about staying above, I believe it was that 102 mark.
Yeah.
And we haven't been above it in a while. So
all
right. Anything else to add?
Rates, trends, Fed review. I think we've covered it all, man. So this is super interesting, right? And just a little soapbox. I was kind of just again looking at data, seeing the volatility in the market, right? And just something I was thinking about this morning, and I actually posted a video for all of my Instagram followers out there, right? All 5 of them. Just the thought of, right now, obviously rates are elevated. There's a lot of customers on the sidelines, right? And either they're renting or whatever it is that they don't want to purchase. And here's the crazy thing is that, again, with as much volatility that we're seeing in the market, this could push through the end of the year, beginning of next year, right? So what if you had an opportunity to purchase at 7%, let's just call it, right, a 7% interest rate, but you're not having to bid, you're not having to go 10, 15, 20% over list, you're not having to give all these concessions to get in a home. Yes, your interest rate temporarily is a little bit higher, but let's just say you decided to wait, and next year mortgage rates are at 10%, right? That 7% doesn't look so bad.
Yeah.
So that's again, the reality is 2% mortgages are gone, right, for a long time. This is my 20th year, and in 20 years I hadn't seen 2% mortgages until the last 2 or 3. And it's it may be that amount of time before we see them again. So 6 to 8 is the norm in a typical economic environment, right? 6% to 8% is your normal mortgage rates. So yeah, don't buy into the doom and gloom. Purchase while you can. Well, I mean, the market's great right now for buyers. So
Exactly. And you sell and buy in the same market. If you're not selling, it's a great time to go to buy. We've been getting buyers under contract for 10, 15,000. One was 25,000 under list.
yeah,
Granted, you might have to sell your house for 10,000 under list. For our particular clients, we got them in a house for 25,000 under the list price. And they sold theirs for 10,000 under its list price. So in my eyes, they still came out $15,000 ahead on the situation.
yeah.
But the August 2021 versus August 2022 market stats that came out in the last couple of weeks. We'll just look at some of our cities here in Collin County just to see how the market has shifted from this time last year to now. In Frisco, in August 2021, you had a sales volume of 233.8 million on only 348 sales. If we go to this time, August 2022, that sales volume has dropped to 176.4 on 236 sales. But I think, the story is also the average sales price in Frisco went from 560 up to 639, almost 640,000. So jumping over to Prosper, just to the north, you had August 2021 sales of 77.1 million on 110 sales. This same time this year, you're close to the same sales volume at 75.3, but you have sold fewer homes at 87. But when we look at our average sales price to list price, it jumped over $100,000 from 665 to 780,000 in Prosper. Salina going to trend very much the same way. What's interesting here is you go from a 46.4 million sales volume in 2021 on 85 sales. In August 2022, you only sell 81 homes in Salina, but you go up in sales volume from 58.6 million, which tells me you had a big price jump in the average cost of a home in Salina. Let's drop down. It always amazes me when I look at Dallas just to see the number of sales and the volume in Dallas County. $585 million worth of properties sold in August of 2021. 1,230 total sales. This year in August of 2022, 565 million in total sales volume. Oof. On 1,034 properties. And in Dallas County, we also climbed to over 400,000 for the average price of a home in August of 2022, going up from 380. Looking at University Park, obviously University Park, Highland Park, kind of our luxury communities, neighborhoods in our area. University Park, 48.7 million in sales volume on 25 homes. Last year, 565 million, or excuse me, 40.4 million on the sale of 17 homes in 2022 of August. But you look at the sales price to list price, or excuse me, the average sales price in 2021 versus 2022, and you climbed from 1.85 million to 2.75 million. That's nearly a $1 million jump. And Highland Park kind of reversing that trend, 42 million in sales volume in 2021 on 17 sales. In 2022, half as many sales as last year, but you didn't quite get half of the sales volume. So that tells me prices are dropping in Highland Park. And as we look at our average sales price to list or our average sales price year over year, 1.85 million in 2021. Average price now is 1.5 million. So maybe Highland Park is our neighborhood to go get a deal in. So if that's something that interests you, reach out to me, reach out to Chris. He'll get you qualified and we'll find it. Let's just take a quick look at county to county. Numbers have pretty much stayed relatively the same over the last couple weeks, with our sales price staying pretty much around that 97 to 98% of list in all of our counties. That has obviously dropped, 2.5 to 3%, depending on which county you're in, versus, I'm going to say 2 months ago. It's continually been dropping. If you remember, if you've been watching our reports back in June, July, Collin County was at about 110% list price or sales price to list price. So Chris had mentioned an interesting, outlier on days on market. You want to touch on that, Chris, real quick?
Well, yeah, it was a report that I was, is that what you're talking about? The report that I was reading earlier this week? Well, yeah. So it's one of the reports that we were reading, or that I was reading, Monday, Tuesday, related to it was new construction, right? As far as home starts, and
it's actually month supply we're speaking of.
Yeah, month supply. So the report had shown, based on starts. So essentially based on when builders go to their, the local county offices or whatever it is to pull permits on starts, right, on homes that they're potentially starting. Well, it gives that, a larger representation of the number of homes being started, but also it doesn't factor out, like, one of the things that I had caught was, if you're looking at just the raw numbers, it appeared that we should have 7-8 months of supply, right? But so if you're looking at just the raw data, right, it's 7 or 8 months of supply. So we should, instead of these, 2.4, 3.3, 1.8 months of supply, it should be 7 to 8 months of supply, right?
Yeah.
Well, once you start backing out like cash transactions that don't get included, once you start factoring in like tear down, so homes that just, not all homes are they don't last forever, right? Yeah, and they're not habitable, they don't last forever. So once you start, like, stripping all those numbers out, well, the raw numbers don't look so good, right? It's like then it drops to like 0.84 months of inventory, which is even lower than we're seeing on these. So I thought that was interesting that that there's just, again, if you're just looking at information that gets reported online or on the news or wherever, it's not like, at the end of the day, you just have to dig a little deeper, because it could very well be misleading. And if you're going off of those numbers, we're like, holy cow, it's 8 months of inventory means it's a buyer's market. Let's go, let's start getting crazy. And that's not the case.
Yeah, I think that is probably a reason why we see pricing maintaining where it's at. You're still, in Denton County, Collin County, Dallas, you're still very close to 100% of your list price, most likely if you have it listed properly.
Yeah, absolutely.
And so, as Chris is saying, when a builder goes to the county and files a permit to put a house on the ground, that house does not exist yet. It's just a piece of paper. So it's really not inventory. So the true inventory, like as Chris says, very well may not be 2.4. It may be more closer to just under 1 month supply when you take out all of those homes that are permitted but not on the ground yet. And then you also have to think about the 6 to 8 months, maybe longer, that it's going to take to get those on the ground. They're probably going to go off the market often. So anyway, that's good information. The news, the media can make numbers and data pretty much tell the
out of
story
anything.
they want. Tell
Hey,
the story the way they want to tell it.
hey, for sure. And if that doesn't, if that is not um legitimized by, so this is something I forgot to talk about earlier, the NBER, right, which is the National Bureau of Economic Research. In the past, for the last 40 or 50 years, if you have two negative quarters of GDP, you're in a recession, right? And as of right now, I think the most recent numbers that came out, this is like the third quarter of negative GDP, yet the NBER has not called it a recession, right? So whether that is going to happen or whether that will happen, these are some of the things that, obviously we talk about offline, but it's an election year, right? All that stuff, that there's these things that play into, we don't like talking about politics, but with the economy, right? These are some things politics inevitably impact, some of the stuff that's coming, that's coming up. So whether it's an appearance of not wanting to make it, not making it look worse than it is, these are in fact some of the things that we look at, right? There's data to support. We're looking at 3 quarters of negative GDP, yet the goalpost keeps moving as to what an actual recession is, right?
Yeah.
Anyway.
Yeah, exactly. So just real quickly jumping over to our, Fort Worth area, Tarrant County, Parker County, staying relatively the same as our counties here in the Dallas area. Still relatively close to 100% of ask. Days on market have gone up. I mentioned earlier, buyers are just more patient now. There's not as many of them out there. So your home is going to most likely sit on the market a little longer. You might wait a little longer to do price reductions than you would have, because I'm still seeing some homes when I run comps that have been on the market 35 days. They're still getting 100% of ask. It's just a matter of that, of the buyer coming through at the right time. So
little
and
patience.
then when we look over at Rockwall County, we're closing a new build over there, I think by the end of the week. So you're still getting close to 100% in Rockwall County. Days on market 17, and they've got here a 2.9 month supply. That, as we said, there's a lot of building going on in Rockwall County, so that number is probably skewed about, what supply is actually on the ground ready to live in is probably way lower than that. So, I think the report full of some great information today. Mortgage rates are ticking up, as Chris said. I think was it yesterday or the day before, they got close to 7.5.
So yesterday they were down, right? So yesterday they were down. I mean, as of Tuesday, so yeah, we were pushing 7.5%, 7.25 on Monday, 7.5 on Tuesday, and then they've dipped a little bit back down. Yesterday they dropped right around 7, and then we're slightly higher today. So again, in that 6, 8 to 7 range, depending on upfront cost.
All right. Well, we'll be back next week. You got any questions in between now and then, you can reach out to Amy and I, 469-369-0873. Reach out to Chris at 214-734-1531. If you reach out to us, we're probably going to get you in touch with him as well.
Yeah, absolutely.
So we can get that process started to go get you a good deal on a new home. So anything to add before we break off?
No, man, everybody have a good weekend.
Have a good weekend. Have a good weekend. I'll see you.